Hey everyone, welcome back to Corporate Decoder, the place where we unpack those massive corporate filings to see if the emperor is wearing clothes or if it is just a fancy spreadsheet with a really good PR team. Today we're diving into Predictive Oncology Incorporated's latest report. And let's just say there were some shareholder votes that got people talking, or maybe just voting. So the big news is that Predictive Oncology Incorporated held its annual stockholder meeting back in November of 2025. And like most of these meetings, there were a few key things on the agenda. Think of it as a yearly checkup for the company to make sure everything's running smoothly and the shareholders are happy with the direction. First off, they've been working on their stock options plan, which is basically how they give employees a piece of the company pie in the form of stock. They decided to add more shares to this plan, a cool 1 million extra shares. Why do companies do this? Well, it's a way to attract and keep talented people by giving them a stake in the company's future success. When the company does well, those stock options can become quite valuable. So with this amendment, they're essentially saying, here are more opportunities for our team to grow with us. Now for the really interesting part, the actual votes from the shareholders. Imagine you're at a big shareholder meeting and you've got several proposals to vote on. That is what happened here, and the results tell a story about what the owners of the company are prioritizing. They had to elect some directors, the folks who steer the ship. Daniel E. Handley and Chuck Newsom were up for re-election, and by the looks of it, shareholders were pretty happy with their performance. Daniel got over 1.7 million votes in favour, with only about 75,000 votes withheld, meaning most people said yes, keep them on board. Chuck also had a strong showing with over 1.7 million votes for him. This signals confidence in the current leadership to guide the company. Next up, they asked shareholders to approve their choice of auditor, which is KPMG LLP. This is like hiring an independent referee to check the company's financial books and make sure everything is fair and square. In this case, an overwhelming majority, over 2 million votes, were in favour of keeping KPMG. Only a tiny fraction, about 19,500, voted against it, and even fewer abstained. This strong approval shows that shareholders trust the company's financial reporting and the auditor it chose. Remember that amendment to the stock plan we talked about? The one adding 1 million shares? Well, shareholders voted on that too, and they gave it a thumbs up. Almost 1.7 million votes were for approving it, while only about 25,000 voted against it. This suggests the shareholders believe this move to expand the equity incentive plan is a good one for the company's future growth and employee motivation. This one's a bit more technical, but it's important. It's about issuing a large number of shares, almost 15 million, as a result of what are called pre-funded warrants. Think of warrants as options to buy stock, and pre-funded ones are a bit of a financial engineering tool. The approval here, with over 1.7 million votes in favour, indicates that the shareholders are okay with the company issuing these additional shares, likely to raise capital or settle obligations, even though it can dilute the ownership of existing shareholders. Finally, the shareholders got to weigh in on how much the top executives get paid. This is a say-on-pay vote and it's advisory, meaning the board doesn't have to follow it, but it's a big signal of shareholder sentiment. In this case, the shareholders gave a green light. With nearly 1.7 million votes in favour of the executive compensation, only about 28,000 voted against it. This suggests that, for now, the shareholders are relatively content with how the leadership is being compensated. Looking at the exhibits filed with this report, we see one key item flagged as a management compensatory plan or arrangement. That is the amendment to the Predictive Oncology Inc. 2024 Equity Incentive Plan. So the main document here really centres around these shareholder decisions and that equity plan amendment. Now, let's wrap this up with a look at the bigger picture. Predictive Oncology Incorporated had its shareholders weigh in on several critical decisions, and by and large they got the approvals they were looking for. The election of directors was smooth, the auditor was ratified with overwhelming support, and the expansion of the employee stock plan was approved. Even the executive compensation got a nod of approval. This overall positive voting outcome suggests a company that, at least from the shareholders' perspective at this meeting, is moving in a direction they support. There were no major red flags raised in the voting results themselves. The company seems to be on track with its leadership, financial oversight, and its strategy for incentivizing employees. The approval of the large share issuance also points towards a company potentially looking to fund growth or manage its financial structure, which is a common strategy for companies in this sector. It's a generally favourable report card from the shareholders. Alright, that is our breakdown of Predictive Oncology Incorporated's latest filing. What are your thoughts on these shareholder votes and what they mean for the company's future? Let us know in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out. And make sure you subscribe for more deep dives into corporate America. And don't forget to join our Discord community, the link is in the description below. Thanks for watching, and we'll see you in the next one.